Hi, this is Marcello Dusil with www.thefxpert.com, here to bring you another installment in our Quick Start Guide video tutorials. Today we will talk about how do I choose a Forex trading broker. Now there are some points every Forex investor needs to keep in mind when choosing a FX broker. The selection of a broker is a very personal decision, and it can vary from investor to investor since every individual has distinct investment styles, goals, capital requirements, and money management approaches. When choosing a broker, you should at the very least consider the following criteria. Minimum deposit required to open an account. If you have a $5,000 trading account or trading capital available to you, and the broker that you're considering has a $50,000 minimum initial deposit requirement, then that's probably not the right fit for you at that moment. Uh, Not at that juncture anyway. You can perhaps deal with them later, but you would more preferably look for a broker that has a lower minimum initial deposit requirement. Two, whether or not the broker offers a demo account for you to practice on. Now, we consider this extremely important that an investor or trader takes their time to get to know their broker. What are their policies? How does their platform work? How does their platform react? You need to familiarize yourself with taking trades with that particular broker and to familiarize yourself with their policies and their regulations. Three, whether or not the broker offers 24/7 customer service. Now, this is important because we deal in a market that's open 24 hours a day, 5.5 days a week. So, will you be able to get in contact with your broker or fix any issues that you may have uh, quickly? Four, rollover fees. Rollover fees are important as well. From one day to the next, if you hold a position, how much is your broker going to charge you? You should be aware of that. That should be one of your criteria. Now, for us, one of the most important, if not the most important criteria is this broker regulated by the Commodity Futures Trading Commission and the National Futures Association, the CFTC and the NFA? Uh, you want to be connected with a broker that is registered and regulated by the CFTC and the NFA, obviously, so that they can maintain and you can ensure that they maintain the highest transactional security uh, for you. Now, also important for our purposes is, does the broker offer the MetaTrader 4 platform? Many brokers do. The reason why this is important for us is that the FX Edge trading software works within the construct of the MetaTrader 4 platform. You, be aware if there are any additional fees that are charged that you may not be aware of. What are their trading hours? Uh, as we said before, the market's open 24 hours a day, 5.5 days a week. Some brokers actually close down 1 or 2 hours before the actual market closes for the day. They also may open 1 or 2 hours after the market uh, opens on Sunday. So you need to be aware of this because there can be price action, there can be market movement, and you may not be able to take advantage of that market movement because your broker isn't taking trades until an hour or two after the market opens. This is another criteria that you should consider. Spreads. Spreads are important because that is your broker's commission. This is how they get paid. These are a part of our transactional costs. Does your broker charge a 2 pip spread or a 3 pip spread, for instance, on the euro dollar? Over the long run, those pips will add up, and you want to consider that in your decision making for a broker. Free charting and technical analysis. We kind of touched upon it with the MetaTrader 4, as MetaTrader 4 is an example of free charting and technical analysis that's offered by your brokers. Of course, we at thefxpert.com offer free charting or I'm sorry, free technical analysis. We offer free indicators as well. Um, but does your broker offer free charting and other technical analysis that you can take advantage of? This is always a plus. The last but not the least is, what is the minimum trading size requirement? There are often three types of trading accounts that one can take advantage of from their broker. One is a standard lot trading account, which is, basically a standard account. The second one is a mini account, which is you can trade at the tenth the size of the standard account. And the third is a micro account, which trades at a tenth the size of the mini account. What this allows us to do is to have better control over our risk management. We're able to take, for instance, with a $5,000 account, you have the opportunity to take less risk in a trade because you can break those trades into smaller amounts. So instead of taking a standard lot, which is $1,000, you may be able to take a a micro lot or a mini lot, for instance. This is extremely important in your decision making, depending on what your capital requirements are. Now that concludes our video tutorial on how to choose a Forex trading broker. For any further details, please visit our Forex trading school, the FX Bootcamp, at www.thefxpert.com. Thank you for watching.